Hey there. So we're going to go ahead and get started in just 1 minute. Welcome. Thanks so much for calling in today. We're excited to share with you a lot of really good information, I think. Just giving it one last minute while everyone logs in. There's Brian.
Hi, Aaron. Hi, Steve. And welcome. Welcome to our next State of the Housing Market report. It's been an exciting year here in real estate, a wild one, and we have a lot of fun things to talk about today. I'm going to give it just about maybe 30 more seconds. We have another 30 people that are logging in. I see the participants growing, so I don't want them to miss out, but I want to be cognizant of your time. So we'll get started here in the next half a minute or so. For just business or housekeeping items, if anyone has any questions today, you should see a question and answer tab in your Zoom. If you have any questions as we go along, please put them in there, and we would love to have a conversation, a two-way conversation today. We find that these are best done in a dialogue format, and we look forward to interacting with you and answering the questions that you may have that are affecting real estate on a day-to-day basis or affecting you personally. So let's keep the conversation open as we go. So, welcome. My name's Brian Ladd. I'm a principal broker at Cascade Sotheby's International Realty, and a member of this fun group we have, the Ladd Group. We are proud of what we do, and we have always valued ourselves or positioned ourselves as knowledge brokers in the industry. And part of that responsibility is digesting and interpreting what's happening beyond the headlines. We feel that so much of housing is understood and discussed in snippets and headlines, and I think it gives a very shallow perception and understanding of what's happening. And we see people making bad decisions based on that limited information. However smart that person is, when they don't have access to the full data, it's hard to make wise long-term decisions, which is always our goal for our clients. So as we get going here today, I'm going to be very cognizant of your time today. My goal is about 20 to 25 minutes. I have Aaron Martin and Steve Lacrosse here. They're leaders of the Ladd Group, very experienced brokers. I'm happy to have them here today. And we're going to have some very fun discussions about what's happening, and we're going to go from there. So let me resume my screen. Looks like we have it up there again. I think we need to acknowledge the elephant in the room right now, that it's been an absolutely crazy market in the last year. It went from doom and gloom of COVID to one of the strongest housing markets that has ever been seen here in the US. And I've got a funny tongue-in-cheek little video here that will help tell the story of what many of our buyers are feeling in today's market.
Is that Apple for sale? Yeah, we're about to put it on sale right now, actually. Well, I'm in the market, so tell me about your Apple. Why should I buy it? Nice try. Okay, people, here's how this is going to work. I have an Apple here. The highest bidder's going home with this. I want all bids in the next 2 minutes, then we're closing it. Bidding starts at $5. Feeling pretty confident there, huh? I mean, $10. He said starting at 5. 15. Is this a new Apple? Yeah, just listed. I'm pre-qualified. I'll take cash. I got cash. 20. 30, 40, no, just make it 45. Is it even worth that? 50. I don't know. Please, this is the 8th Apple I've tried to buy. Could I at least see it up close? Nope, it's an Apple. You know what it is. You either want it or you don't. I'll take it for 100. What? I'm from California. It's the cheapest Apple I've ever seen. 120. Why did I do that? I don't know. Excuse me.
So, I like the Apple analogy. It's what a lot of people are feeling right now, and really speaks to the state of emotions, both on buyers and sellers, on kind of that greed, maximizing sale price side on the sellers, and just the distress and uncomfortable situation that people are dealing with on the buy side. And I think it's best talked about under the terms of supply and demand. Housing has a lot of factors that affect it, from interest rates to macroeconomic to ties to the economy, ties to the stock market, wealth effect, demographics, household formation, a lot of that. But when it really all boils down to it, it's a very supply and demand driven industry. Sam Cater, who is the chief economist, Freddie Mac, heavy hitter, says the main driver of the housing shortfall has been the long-term decline in the construction of single-family homes. That decline has resulted in the decrease in supply of entry-level single-family homes or starter homes. So obviously, we don't have enough homes nationwide. I'm talking nationwide a little bit. These all play here in Bend, but I want to give you an idea of what's happening both in and outside of our market. This next slide here, this is single-family housing units completed by decade. And this really shows that this isn't a 2021 problem. This is a 2010 to 2021 problem. This is a decade-long problem that we've been dealing with. So historically, any 10-year period in housing in the US, we've produced about 10 to 12 million homes, 70s, 80s, 90s, 2000s, 10 million homes, a million homes a year. When we went through that recession in 2007 and 8, housing policy changed, finance changed, banks stopped backing builders. We had very fundamental changes in housing, and builders stopped building homes. What this shows is that in the last 10 years, we produced about half as many homes that we had the previous 10 years, despite an increase in population. So what we're witnessing right now is a historical shortage of homes across the US. And this is in a time where we're seeing demographic bubbles coming into their home buying years. Those millennials that I always like to make fun of and their millennial, their avocado toast, they're all having kids. They're all wanting homes. They're wanting to get out of the city. They finally feel that suburbs are not as uncool as they thought when they were growing up. And we need more homes nationwide. We need more homes in Bend. We need more homes in Oregon. And we're coming off of a 10-year shortage that just absolutely exacerbated this problem. Inventory levels. So last year, 2020, we had very few homes on the market. We had about 50 to 60% of normal. But even compared to last year, we're only at about 50 to 60% of last year's inventory. So nationwide, we had about 1.2 million to 1.3 million homes on the market any one month. This year, we're at about 800,000 to 900,000. So we're already, 30, 40% below historical norms in the amount of inventory that's available to buy in housing nationwide. So these two graphs, I don't want to get too data wonky. Top graph is inventory of homes for sale. This is on a monthly adjusted basis, how many homes are available in Bend in any one month. Total homes that came available for sale in any one month. Historically, we've averaged right around that 1,000 home mark over the last number of years, far below what we need. But this year it's even worse. So right now we're at about 400 homes in 1 month for May available for sale. Last year, 900 to 1,000. Year before that, 1,200. So we're at about a third of the inventory that we've historically dealt with. So anyone who thought buying a home in Bend was tough 2-3 years ago, it's 3 times as hard right now. If we look at the bottom graph, this one's interesting because historically, the lower graph is pending sales. As inventory comes available, we sell homes. As inventory goes off the market, we sell less homes. So they've always kind of gone in tandem. We've seen a complete break in the data between those two data sets this year. So the bottom one shows that pending sales are absolutely going through the roof, despite the fact that we have less and less homes for sale on a day-to-day basis. So for the last 6 months, every day after day, we have less homes than the day before it, and sales are going up. So what it's doing is it's absolutely eating the inventory. And this is a perfect data chart for that Apple video that we just showed.
Brian, do you want to talk a little bit about, we hear a lot from, potential buyers, yes, but new construction is on the way and that kind of thing. Do you want to speak to that a little and just share with everyone how that won't be enough?
Yeah, so we definitely have some inventory coming. And that's a great point. We're going to talk about that, but it's a drop in the bucket. We have such a shortage of homes. And we talked about this in one of our past webinars, 6 months ago, with housing policy in Bend, where I ran some analysis based on demographic or population growth, whatnot. And my estimate was that from 2008 to 2020, we were short about 1,500 homes a year. And just to meet demand, to create enough housing that workforce housing, people that have a salary can actually afford to live here in Bend. So we went into this pandemic short, in my opinion, between 8,000 and 10,000 homes in Bend, and it only got worse. And so the problem is that we're not catching up. So we were already way behind prior to this pandemic. And now that the boom has happened, everyone wants to leave California. Everyone wants to, move to these lifestyle towns like Bend. It's making it only worse. Building permits. I could talk data all day, but I want to talk about building permits because it speaks to it. Before the pandemic, before the crash, early 2000s, 2004, 2005, we were doing about 3,000 to 3,500 building permits a year for single family homes. Last year, I think we did 1,500. So we're still only building half the amount of homes per year that we were in the early 2000s. So we're so far behind. Even if building were to double right now, we've got a deficit so deep, I just don't know how new housing can make much of a difference in the near future. So does that help? So it looks like you just put a poll up here. What's keeping you from buying now? Shows a pretty even split between expectation of future price drops. We're going to talk about that today. You're not finding the house you like, and you've been bidding but losing out. Aaron, Steve, is that all in agreement with what you're seeing on the front lines on a day-to-day basis?
Yeah, absolutely. I mean, I'm glad we're going to touch on, what does this all mean for prices and what does this mean moving forward? We did show that little Apple scenario and kind of puts that in perspective, what people are going through. I'd like to add to that. It's our goal to not make buyers feel like that, to make some sense out of it and put some reason behind what we're doing. But it is frustrating for buyers. Absolutely. We see it daily where they're just getting frustrated that the house that they want is there and they're just not able to put it together. So it's interesting that not many people have said that they're not finding the house that they like, because we are seeing houses come on that people will want. And it's just that demand, like you said, that we're seeing here in Bend in particular is continuing to just keep the pressure on it. And it makes it really difficult for buyers right now.
Okay, great. Thank you. So let's move on. So let's talk about pricing. Looks like, what's happened with price? Now, this is the uncomfortable part. I don't like high prices. I don't like dramatic increases in prices, and that's what we're seeing. If we go back to, this is a 3-year chart dating back to 2018. If we go back to the beginning of 2018, median sales price of a house in Bend was $410,000. In May, $653,000. And that number I absolutely have to choke on. And what's even worse is if I run that in average price, which it takes more into account the high price anomaly sales that we're seeing in Tetherow, Highlands, beyond some of those $3, $4, $5 million sales. The average price in Bend right now has an 8 in front of it. It's $810,000. So that is what happened to the price, and it gives support to the people that feel that prices are going to come down. I don't believe they are, and I'm going to tell you why, but that's what's informing that emotion. So Google just reported last week, this is a couple-week-old stat, but reported last week that the search question, when is the housing market going to crash? It spiked 2,500% in the past month. So I think that's that is what is on everyone's mind, and let's talk about it. It's the elephant in the room. Lawrence Yun, chief economist of the NAR, clearly stated, and he's very conservative. He is not a partisan lobbyist that always believes that the prices will go up. But he's clearly said, this is not a bubble. It is simply a lack of supply. This is not a bubble. It's simply a lack of supply. And I'm in line with him right now. And I'm not swayed by the position I'm in. I don't want these high prices, but I don't see a reason they're going down. And I'll get to that here in a second. Here we are. This graph here shows year-over-year price appreciation. What this shows is we're not alone in the pain that we're experiencing right now. As I was talking about before with the nationwide shortage in housing, everyone's feeling the pain, especially the West. Bend, Oregon up 15% last year. Idaho, man, they in the crosshairs, up 24%. Washington, 16%. Arizona, 18%. And what this is in line with what we're seeing, where our buyers are coming from and how they're being affected by this pandemic. This gave everyone a chance to have a timeout. They were home, their kids were out of school, they retire early, whatnot. They have permission, and not only permission, but encouragement from their employers to work remotely. And everyone seemed to have an epiphany about who they want to be and where they want to live and what they want their life story to be. And their life story is in the Northwest and the West. And so everyone's feeling this across the board. The next slide, this shows what's happening. This is a housing inventory. Oregon down by 55% in 1 year. And we got to keep in mind, that's down from a year that already had low inventory. So what we're seeing has never been witnessed in the data I look back prior to even World War I, we've never seen anything like this. So what do we need to look for? How do we interpret this information? We need to look for the trends that most likely affect a change in housing prices. We need to look out for a change or an increase in inventory. The good news is that inventory in the last couple of weeks has started to climb. We've started to feel that climb. So this is a nationwide graph, but this is showing that inventory in the last couple of weeks is up 40% year over year for the same time period. The bad news is that last year was already low and our sales are even higher than last year. So the green bar here shows that finally we have seen some inventory come on the market. The bad news is that orange and red line on the bottom there, what that is the amount of homes that are for sale. That is the total listings for sale. And we're still continuing to fall. So we have less and less and less homes available every day because the demand is simply outstripping that new supply that's coming out. But this is something that we need to keep an eye on. If we have a protracted time of 3 months, 6 months, 9 months of growing inventory, that suggests to me that maybe we'll start catching up to that demand curve, which will start putting a little less fire under those housing prices. Steve, Aaron, are you seeing that in the front lines? You're on the front lines listing our properties every day. What are you seeing? Are you seeing more houses come available, more discussions, more seller motivation in the last month?
Yeah, I mean, so typically the question has always been, I want to sell my house, but where do I go? And we're seeing some softening in that, and that more inventory is coming on and it's loosening the reins and it's allowing people to move, and then they're listing their homes, and such is the cycle, of course. The big question that we had going into this spring was that we know how many new construction homes would be coming on because we watch building permits. We didn't know how much shadow inventory or resale inventory we would see. And that was the big, kind of $100 million question for us is, will we see a boatload of shadow inventory coming on? And then that, of course, increases supply, reduces demand, kind of evens out prices, kind of softens things a little, gives just, more opportunity and more options for buyers. Less buyer burnout was our hope with that as well. I think what we're seeing is a modest amount. We're seeing some additional inventory come on, but it's not extreme yet. So this is the time we would typically see a lot of it in June, kind of post school getting out, kind of this phase of the summer. And we're seeing some, but it's not enough. Steve, what do you think about that?
The one thing that I would add to it, and we'll touch on it just a little bit later, is that there is more inventory coming on, but it is still being eaten up by the demand. The demand is still there. And so although the inventory is coming on and we are getting new listings, as you can see by the total number of listings that we have, that number isn't really going up that much, right? But the new listings are, but as of yet, that demand still is there and it continues to absorb it. So that'll be something that, of course, we're always keeping our eyes on to see how those numbers maintain that balance. Yeah,
and this shows some hope. This next screen here, this is month over month change in housing inventory. This shows that 11% that we have in Oregon. And we're seeing more of it now, Idaho, Utah. But if you look, Idaho, why are they able to put on inventory twice as fast? And that goes back to your question earlier, Aaron. They're a pro-growth, get out of the way of the builders developer state. Right or wrong, we've had webinars on housing policy in Oregon dating back to the 70s. and the Land Institute and urban growth boundaries and all of those things. But we simply can't react like in Idaho. They're stamping out subdivisions as fast as they can, which is keeping their price a little bit more modest, even though their price appreciation is higher right now. It's starting at a much lower point. They're still building new homes that even have a 2 or a 3 in front of them, which in Bend is unattainable. But nationwide, though, inventory is not catching up. So we're doing better than some, but we're not doing as good as those extremely pro-growth states like Idaho. So this is a poll of economists. Pulsenomics put this together, and I only have so much faith in economists because everything's done in seclusion or in an ivory tower, and we're the boots on the ground. But they put together a poll a couple months ago and said, hey, when is inventory going to grow? Most of them said second half of 2021, which is in line with what we're seeing. And then the second segment of that was first half of 2022. And we're in agreement with that. We feel that there's been a lot of people that have noticed these high prices. And just as COVID accelerated people's moving plans to come to Bend, I think it's also accelerating people's moving plans to downsize, to go somewhere warm for retirement, things like that. And these prices paired with the vaccine, paired with more confidence to have people in their house, paired with a lot of things is going to bring on more inventory later in the year this year than we normally see. Normally we see that inventory start building in February, March, April. I think this year it's going to be more of a June, July, August, September. And then we'll just have to watch to see where those trends in the buying, how that parallels that. So other big thing that we need to watch out for is the increase in interest rates. And this is one of the reasons why I believe it's still a very logical decision to buy a home in this market. And it's not because we want a commission. It's because interest rates play such a big portion, they have such an important piece of the buying process. When you look at someone, like if you look at a 30-year loan, interest is 70–80% of the loan cost. But even in a 10-year period, average ownership is about 8 to 10 years. Even in an 8 to 10 year period, interest is about half the cost of owning a home. And so what we're going to see is that as interest rates go up, it's going to directly affect housing affordability, which as housing becomes less affordable, demand will slow just a little bit. So it's going to have two effects. One, if interest rates go from 3.2% to 5%, demand will slow a little bit, but the cost of acquisition is going to go up. So this goes to a thing that we've talked in detail before, and we've run spreadsheets, kind of scenarios, whether it's better to buy or wait. And there's all kinds of assumptions. But the reason I said before why I still think it's a logical time to buy in this market is that if you're getting a mortgage, and you're getting a mortgage at, it's 3.2, but let's call it 3%. If interest rates were to go up 1% in the next year, which most economists are predicting that we're going to be in that upper 3s, low 4s range within about a year. So it's very likely interest rates are going to go up. So if you were to wait 1 year, that 1% is about a third of, your interest rates going up by 33%. So your monthly mortgage payment is going to go up by about 20–25%. Even if housing prices were to stay stable. And so then what we have to say is, okay, we have a pessimist in the room who believes housing prices are going to go down 10 or 20% in 2, 3, 4 years. The problem is that interest rates should be going up with the fiscal policy that we have in the government, with the inflationary pressures that we have. And I know there's some really sharp minds. I see Joe, I see a few other CPAs, whatnot in the panelists. I'd love your opinion. But the policy that we're seeing is going to force the Fed to raise rates, and we're going to have higher mortgage rates in the future. And what will happen is even if prices go down 10 or 20%, if your mortgage rate goes up by 50%, your monthly cost of owning a home is higher. Now, this isn't akin to like the whole lease versus buy, the car thing. This has to do with real dollars spent and your total cost of acquisition. And the fact that leverage plays such a big portion of buying a home, that we need to acknowledge that this historical opportunity to get interest rate money, at 3% is what's driving a lot of this. But this is something we need to keep our eye on, because if interest rates continue to stay low, you know, I just, it's going to continue to fuel buyer demand, which is also going to increase the cost. So, or increase the appreciation on homes. So it's hitting a couple different things, but this is something we definitely need to keep an eye on.
Well, and if I could just jump in real quick, just anecdotally with what we're seeing in terms of the transactions and the purchases that we have, there was a higher percentage of cash deals, I'd say 4 to 6 months ago. Now we're seeing a lot more of the deals are finance deals. And so these fluctuations in interest rates, whereas that may not have affected a whole heck of a lot when it was mostly cash in the market 3, 4, 5 months ago, these will have more of an impact with the number of transactions that are, now finance deals. So I think it's an interesting point that as we see interest rates move around, it can have even greater impact just given the number of people that are using them.
Yeah, good point. And so I actually, totally unrelated, I got my hair cut today, and it was some gray hair on the sides there, a little bit more than I thought I had. And a lot of that comes from, now I've been around long enough. I've been doing this for over 20 years, and I've seen the cycles. And what I've witnessed is bad housing decisions, and people that got hurt in housing were people that were over leveraged. They bought for short term, and they didn't have the holding power to last through it. And when I look at these interest rates, who knows what's going to happen in the future? Certainly all the data I'm seeing shows that this market is going to be quite strong for the next couple of years. But even God forbid, there's a big another correction. It won't be the scale of what we had in 2008. But these interest rates really are that insurance policy. And when you can get money this low and you're not over leveraged, it allows you to weather it. The people that I saw got hurt in the downturn, 2009, 10, 11, were people that were overly leveraged. They had 90% loan to values. They were speculating. They were buying properties that had negative cash flow just because they were thinking the homes were going to go up 100 grand a year. Those were the people that got hurt. Anyone else that was properly leveraged, that had holding power, that had a good 30-year loan as opposed to a silly 5-year ARM or interest only or all that crap, those were the people that got hurt. The people that didn't get hurt were people that made good long-term decisions. And that's why I still think it's reasonable to be a buyer in this market. I believe in Bend. I believe in Bend long-term. We have such a supply constraint. I don't see prices, unfortunately, going down. To be honest, I kind of wish they would. It would make our town healthier, but we're going to have to meet it through housing policy. We're going to have to meet it through density. We're going to have to meet it through fighting with the city for urban growth boundary expansions at a faster rate if we want affordable housing. But I think the interest rates are that insurance policy that allows people to sleep at night investing in this market. Demand change, that's going to be another big one. Wall Street Journal, consumers were more upbeat about their income prospects last month, and many appear eager to spend. The survey found 9% of Americans plan to buy a house in the next 6 months. Let me repeat that. 9% of Americans want to buy a house in the next 6 months. This is the biggest share in records going back to 1978. So 1 out of 10 Americans want to buy a house next year. So if we think that demand is going to back off, we're going to have some major economic news or disruptions to change that sentiment. So if we think that this is the demand and we're all done and people are going to go back to the cities, certainly the data and the sentiment of American buyers is not supporting that. So let's get to boots on the ground, how a buyer, how a seller is successful in this market. Aaron, Steve, do you want to jump in here?
Yeah, absolutely. So we had alluded to this earlier, just, the first thing on here is just be connected. And even though inventory, you've been hearing it for a while, you've seen our newsletters, you've seen the other webinars, inventory's been low. We're seeing some shifts in that. We're seeing week to week basis that inventory is picking back up, month to month it's picking back up. But this last week was the first time that we've seen in a number of months where the number of new listings outpaced the number of pending sales. And so how will this continue? I don't know. This is why we look at the data as much as we do. And so, really all of these tips are kind of just being prepared. So the next one I have is be ready. Have everything in line when you start the process. Have talked to your financial advisor, have your pre-approval ready, know all the different scenarios, which then goes into the third one, which is have those tougher conversations ahead of time. You don't want to be making an offer when it's the first time you're hearing of an appraisal waiver or waiving a contingency, and what those could mean. What does it mean when you waive an appraisal? You know, how does that factor into your finances? And so, you know, we encourage, you know, sometimes it makes sense for people to buy, sometimes it makes sense for people to sell. But really the only way you can do it is if we sit down and have these conversations so that you're most prepared when that opportunity comes up. So, you know, the real summary on the buyer end of it, and I think it's very similar on the sell side, is know your options, have things in line, have worked through what the different possibilities are, and talk to us. As you can tell, you know, we like talking about this stuff. We like dissecting the data. We like getting into the weeds, and then you're talking about day-to-day and week-to-week information. Clearly, we've I don't know, we enjoy this stuff and we want to share it because it impacts you. It's a big decision that people make. So
yeah, so tell me, are you finding success with your buyers despite all the challenges that we're having right now?
Yeah, absolutely. I mean, it's frustrating. There's no doubt. But I was actually I just met one yesterday and we were talking through it. They bought back in September, and at that time there were 2 or 3 offers on the property. Right now, in that same price point, there would probably be 10. But at the time, it felt like a lot. And they got the house. We had lost out on 2 or 3 different houses, and he just said to me, "I can't tell you how happy I am that we ended up where we ended up." And you know, at the end of the day, like, if people are looking at this the right way, which is this is your home, not this is a quick flip, this is, you know, this is your home and this is where you want to be. You're buying for the long term, you're getting involved, their families in there, they couldn't be happier, they got to move to Bend, they got to get settled. You wouldn't have wanted to be anywhere else. So yeah, absolutely. It's the frenzy kind of has been going on for a little while. So it's good to get to talk to people 3, 6, 8 months later and hear, I didn't even want those first 2 houses. I couldn't be happier in the house I ended up in. So, you know, we certainly, those are the stories you want to hear.
Good. And this market is certainly punishing casual buyers, right? Or working with an agent that works part-time or any of those scenarios, right?
Yeah. You gotta, I mean, it's about like all of these things, being prepared. It's about having a good relationship with the other broker. It's about working professionally. It's strategizing. How are we going to do this? What makes the most sense for us? Is timing more important, or is money more important? There's just so many different factors. So yeah, one-on-one conversations in the office, on Zoom, phone call, we do it all.
Well, and Aaron, thank you. Aaron is on the front lines with our sellers, and let's talk. That's a very different dynamic right now. Let's talk about it.
Certainly. But I think that the perception right now is that it's a great time to be a seller and you can sell your house for any price, no problem. And honestly, that's really not true. So, you know, as challenging as it is on the buyer side, it's, you know, as challenging in so many ways on the seller side. And just as you have, you know, kind of said, you're choosing a home on the buy side, not an investment, you know, your primary residence shouldn't be considered that. Same thing with selling. Like, don't just, you know, focus on selling, you know, because it's a reliable exit right now. I think the important thing right now is to be focused on selling, knowing that you're your next step, because certainly it's hard on the buy side when you're on the other end too. I would say there's a couple of tips we have for people. And one is to really kind of caution folks about pricing carefully. So we have spoken about this before. I know it's not new news to everyone, but the buyers are savvy. Their brokers are, you know, kind of aware of prices. People are recognizing that while we've gone up 24%, up to 30% in a year, depending on the price range you're in, that's not always palatable to a buyer if you're trying to go up and above that or up and above the comparables. And so while the market will absolutely reward you if you're at the exact right price or even slightly under by multiple offers and better terms and kind of the competition that's created, the market will punish someone who has overpriced their home by way of letting it sit. And, you know, we've used in the past this kind of analogy of a brown banana, which is the banana sits on the shelf, it gets one little bruise, and then it's not the one everyone grabs, and so it sits and turns more and more brown. Nowadays, where it used to be hundreds of days on market was the average here in Bend, nowadays, if the home is on the market for a week, I get phone calls saying, hey, what's going on with that house? Why is it still available? So it certainly can happen. There's certainly kind of you know, a perception that things need to go quickly, and by not pricing yours kind of right on line with where it should be, you run the risk of kind of getting that effect with it. Doesn't mean it's always the case, but certainly we're seeing it, and we're recognizing that buyers see you know, are drawing a distinction between where they'll go.
And while we're talking about that, can you also talk about, you know, 2-3 months ago, it was hard to understand what homes were worth and where the values were going and what was a cap, and buyers not, or sellers not wanting to leave money on the table. How has that matured, and have we found logic around pricing right now?
I think we have found, I don't want to say the top, but I think we found the threshold that people are comfortable with. I think we've recognized that, the 25% appreciation is understandable, and people recognize that's the case. And it's just truly the factor of the market as it is. I think when we're trying to extrapolate over and above that, then that's where we run into, just pushback, I guess is the right way to say it. And the other thing is, I think, people are also looking at pricing as an absolute. So when we're pricing homes, of course, we're looking at price per square foot, and we're assessing replacement value and all those things. But people buy in thresholds and of budget, essentially, and comparison to like property. So if you're in a neighborhood that has a bit of a threshold of $1 million and you're trying to be up at 1.2, people recognize that that's just not something that ultimately they can resell for, and it will take a while for the market to catch up to it. And they're kind of shying away. So there's a limit, and I think we found it. And I think, not everyone can extrapolate over and above the crazy high price that is over and above that crazy high price, if that makes sense.
Yep. Yeah, great.
So then the other thing I would say is that strategy really matters. So this market is, it's one of the most challenging on the seller side that we've seen. It takes finesse, it takes tact, it takes skill. Buyers are tired and burned out and stressed out, and they're, writing offers with 2-hour response deadlines, and they're ticked off if they don't get your response by then, and that kind of thing. There's just lots of emotion involved. And I think you need a calm, strategic kind of listing broker who's going to support you through that, to ride it out the right way, the way that's going to get you the highest price without creating panic, without putting unnecessary stress on you, without you, jumping at something thinking it's the only offer you're going to get because it was the only one that came that first weekend, whatever it might be. We're really recognizing that homes can be undersold, they can be oversold, and people can pull out. And having a trusted advisor to kind of finesse the strategy, I think, is really essential. We're seeing the value in that right now. This is where we earn our keep, I guess Brian would tell us every day. So then the other thing is just to kind of share with you that everything you hear and everything you see, save this podcast, this broadcast is a lagging indicator. So while the numbers are showing and the media is telling us about the crazy high prices and the 10 offers over asking that you're going to get, that is 3 months ago, and they're just now seeing the metrics for it. We're in the street day to day, recognizing what's happening on an hourly level. And so I would just say, you're seeing that it's a lagging indicator. We have kind of what's happening right now in our little microcosm in Bend. And so if you have questions about that, I think let's sit down and talk about it, because.
And Aaron, before you get to that last point, I want to jump on that. That's a really good point. The headlines are always 30 to 60 days behind. That's how long it takes to buy and close a home. And data doesn't post until you have closings. So real estate headlines are always 60 days behind. Very few economists, and even fewer journalists actually understand the leading indicators. For example, what everyone's going to see in housing in the next 2-3 months, housing sales are down, housing correction. You know what that is? It's going to be fewer and fewer sales because we're out of inventory. Average days on market right now is 4. Historical average is 4 to 6 months, 120 days. We're down to 4 days on market. So when we run out of inventory in the next month or two, that pending sales is going to flatten and decrease, and everyone's going to go, real estate's correcting because housing sales are down. Couldn't be further from the truth. We're just out of things to sell. So just watch for that headline in the next month or two and chuckle. And when other people are saying, see, I told you housing was going to crash, it's not. We're just out of homes. So housing sales are going to be down. The one you got to watch is the price.
Totally agree. Totally agree and support that for sure. So I think the only other thing I would say is, just like on the buyer side, be ready. I think a seller should be ready. So whether it's now, and we always suggest, we're in this industry for 20 years, not the next 2 months. So we always suggest you do it when the time is right for you, not because you're trying to chase a cycle or trying to cash out now because you think the prices are high. But if you are thinking of selling, call us in now, have us do an audit of your home. Let us give you, kind of tips and advice of how to get it ready and staged and cleaned up and this little crack painted and the little things that might come up. And then when it is time, you'll be ready. We even suggest, now it's about to be really green and beautiful. If you're thinking of selling next winter, let's get your photos now. Let's get it while it's really green. And then in February, when everyone's listing photos with 3 feet of snow, your home will be green and beautiful, things like that. So just call us. We're ready. We're here. It's never too early, I guess is the point. So yeah, that's what I've got.
Yeah. So, Steve, I mean, we've gone over in time a little bit. I want to keep this quick, but let's talk about, do you want to talk about the migration here?
Yeah, we added this. So a lot of times people get shy with their questions and answers during the webinar. So we had reached out beforehand, and really a couple of the big ones that had come up was this, like, what is the migration that we're seeing? Where are people coming from? Where are they going to? And it's interesting. We're seeing, not surprisingly, there's a lot from our feeder markets. There's a lot from California. We're seeing a lot from Hawaii. But if you look at this list, there's Virginia, Texas, Montana, Illinois, Minnesota. I mean, this is Oregon as a whole. Bend certainly does pick up from those Seattles and Portlands as well. But it's not just those few feeders like we've been used to. And then the other piece, which I find interesting, is that where are people moving to? We don't have the hard data on this, but we've seen a lot going to Arizona, a lot going to like in Idaho or out towards Boise, and even a lot going back to California, which is interesting when you look back on, places like Boise and Arizona, places like Idaho and Arizona, both have appreciated even more than Oregon. So it isn't necessarily about price. It's about, or what the market has done over a short period of time. It's about prioritizing a certain lifestyle, or being able to get something different and the price point that you're looking for. And so anyway, a lot can be seen in those charts about appreciation, but people are still moving to those areas where that appreciation is highest. So anyway, those were a couple of the questions that had come up leading up to this. Again, we don't have any today. Everyone's very quiet today. So send us your questions after the fact. Maybe some things pop in your head a few hours from now. We're here.
Yeah, so thank you, Steve. Thank you, Aaron. You're the best in the business. And I appreciate everyone who joined in today. I see a lot of names of current clients, past clients, and we're here to help. We don't know everything, but we're certainly trying to get closer to the truth. So please let us know. You've got our contact information, and go have fun. Go be successful. I'm sitting here at Tethero right now in my office looking west, and I hear music streaming up from the pool. I think they've got a luau going on. So I'm going to break out and go take a dip. But thank you all for your time today, and look forward to serving you in the future. Take care.
Take care.